Hello everyone, welcome back. Today we are going to study the 8th chapter from Corporate Accounting and Auditing, that is, Audit of different types of undertakings. Accounting and auditing largely depends on the nature of the organization. That is, the accounting methods and financial statements differ from one organization to another. Auditors must tailor audit procedures to match the organization's accounting system, and same audit procedures cannot be applied universally. That is, different regulatory requirements. Many organizations are governed by their own regulatory frameworks. That is, banks are regulated by Banking Regulation Act 1949 and RBI Act 1934. The cooperative societies are regulated or governed by Cooperative Societies Act 1912. The local self-government, that is, the municipalities and panchayats, are governed by the Constitution of India and the State Municipality Acts. So, each of the firms or organizations have their own regulatory framework which prescribes for specific requirements with respect to accounting and reporting. The industry type, the nature of business, and internal policies influence how audits are planned. Auditors must consider all these factors before deciding auditing procedure. Now let's move on to the first subchapter, that is Audit of Educational Institutions. Most of the educational institutions are registered under the Societies Registration Act 1960 or Public Trust Act. Universities and large institutions may be established under central or state legislations, and the audit is conducted to the trust deed, registrations, or relevant acts. Now let's see the key audit procedure. First one is understand the constitution. That means one must study the trust deed or act or regulation and ensure compliance with rules for maintaining the accounts. For universities or central institutions, review regulations under the special act. Second one is assess the internal control system. That is, one must check the internal controls related to asset acquisition, maintenance, authorization of transactions, etc., and evaluate system before planning the audit progress. The third one is consult the minute book. That is, carefully examine all notices and minutes of the meeting of governing body in case of colleges or senate or syndicate, court and council, and other committees which affect the accounts and finance, and ensure decisions about financial matters and expenditure are properly approved. The next one is consult the budget. Review the budget allocations and confirm all allocations and expenditures are within the approved budget. The next one is verify receipt related transactions. Now let's see the receipts of an educational institution. The first one is the tuition fee. That is, the fee receipts with the fee register must be tallied. Check if all students paid fees on time. Verify if there is any late fees, concessions and arrears. Ensure all collections are deposited in the bank and confirm that unrealized arrears are written off with proper authority. Next receipt is admission fees. So, the admission slips should be matched with the admission register, and the amount collected must be deposited to the institution's bank account, and if required, confirm transfer to capital fund. Next receipt is other fees. That is, verify the collection of library fees, hostel fees, development fees, exam fees, etc., and cross-check with fee registers and confirm correct accounting. The next one is miscellaneous income, that is like rent income, sale of forms or fines, etc., and ensure them the proper accounting treatment. The next one is verify payment related transactions. The first payment is salaries and wages, that is, verify payroll and ensure amounts are properly sanctioned. For government or aided colleges, ensure that the salary bills are prepared correctly, deductions like PF or income tax are deposited in time, and distribution of salary is made to the right person. The next one is special events or seminars. Check whether expenditure on seminars or workshops and events is properly accounted for, and that must match spending with budgeted amounts and approved sanctions. The next one is regular expenses. Verify payments for electricity, telephone and internet, traveling expenses, broadband, etc., and ensure vouchers and bills support all payments. That is, it must be tallied. Then, fixed asset purchase. Check payment for college building construction, laboratory equipment, library books, furniture, and machinery, etc. And also verify vouchers, purchase committee resolutions, and grant utilization. The next one is refund of caution deposits. Verify receipts and vouchers for refund of caution deposits are collected from students. The next one is hostel expenditure, like hostel repairs, maintenance, electricity, water charges, or food items. The payments must be checked and confirm correctness using bills and accounting records. Now, endowment fund investments. Ensure endowment funds are separately invested and confirm income from such investment is credited properly. The next one is verification of assets and liabilities. The first one is physical verification, that is, check physical existence of tangible fixed assets using the fixed asset register and verify investments using the investment register. The next one is about depreciation. Ensure depreciation or amortization is provided according to the policy. The next one is TDS compliance. Verify TDS deducted on interest income and deposit status. The next one is outstanding liability. Inspect unpaid bills, electricity charges, TDS, PFs, etc. Next one is inventory verification. That is, one must verify the furniture, stationery, tools, labor materials, other equipments and match with the stock registers and test checked items. Next one is stores and consumables. Review systems of inspection for provisions, foodstuffs, clothing, medicines and ensure proper receipts, issues and approvals. The last one is verification of financial statements. Check that the income and expenditure account and balance sheet are prepared correctly and ensure compliance with accepted accounting principles as well as relevant acts and regulations. The second subchapter is audit of healthcare organizations. Healthcare organizations include hospitals and nursing homes, maybe government or local authority, charitable trust or private organizations run them, and auditors must prepare a sound audit plan due to unique processes in healthcare institutions. So let's see the audit procedures. First one is understanding the constitution. Examine the documents to determine ownership and structure, that is the trust deed, partnership agreement if it is a partnership, and articles and memorandum of association if it is a company. Then identify the rules and regulation for management as well as the procedures for preparation of accounts. Next one is assess the internal control system. Evaluate the controls related to acquisition and maintenance of assets, the authorization of transactions and scope of audit works, as well as check the effectiveness of the system in supporting accurate accounting. The third one is consult the minute book, that is review minutes of board of directors, managing committee and purchase committee, and also ensure decisions affecting the accounts are properly approved and bank operations, expense approvals, etc. comply with the rules of the company. The fourth one is verify the receipt related transactions. First one is government or local authority grants. Verify the grants through government orders, sanction letters, counterfoil of receipts. Then patient collections. Check the payments record in patient administration register as well as the counterfoils or copies of bills. Next one is pathological test income. Vouch receipts with test-based income records as well as counterfoils or copies of bills. The next one is donations. Verify donation receipts with counterfoils. The next one is guest house collection or if applicable. So compare register entries, counterfoil of receipts and accounting records. Interest and dividend income, vouch with interest register as well as the interest or dividend warrants. The next one is earmark donations. Ensure that the funds received for a specific purpose are used only for that purpose. The next one is verify the payment related transaction. First one is capital expenditure. Verify the purchase of machinery, furniture, vehicles and other equipment. Check supporting documents like invoices, tenders, counterfoil checks and approval evidence. The next one is salary payments. Vouch salaries using attendance register, payroll and employment or appointment records. Ensure staff appointments are authorized as well as the salary payments are properly approved. Next one is doctor's remuneration. Verify payments using list of visits as well as the surgeries or operations performed by the doctor. Next one is purchase of medical consumables. For test kits, X-ray plates and consumables, verify tenders, purchase orders and invoices. The next one is overhead expenses. Verify overhead expenses such as telephone, electricity, fuel and other overheads. Check all with proper documentary evidence. The next one is verification of assets and liabilities. First one is stock registers. Verify medicines, food items, hospital equipments. Check with accuracy and valuation. Next is physical verification. Conduct physical verification of fixed assets and investments. The fixed assets must be verified by using fixed asset register and the investments must be verified using investment register. The next one is depreciation. Check correctness of depreciation rates and proper accounting treatments. Next one is liabilities. Collect complete list of liabilities and verify using contracts and arrear bills. The last one is verification of financial statements. First one is general verification. Confirm financial statements follow the correct format and match the entity type, that is if it is a profit seeking organization or non-profit or charitable trust, and reflect the correct ownership structure. Now let's move on to the third subchapter, that is audit of organizations in hospitality sector. So the hospitality sector includes 4 types. First one is food and beverages or restaurants, travel and tourism, lodging or health and guest houses, recreation like cinema halls, theme parks, etc. Different categories follow different business process and audit procedures also vary. Let's see the common steps to all organizations. First one, understand the ownership structure. That is, identify the nature of the entity, whether it is a sole proprietorship or partnership or private or public limited company. Examine regulatory requirements for accounting and management. The next procedure is evaluate internal control system. Determine the nature of controls, timing of checks, and extent of audit procedures. The next one is verify valid business license. Ensure that the organization has an authorized license to operate. The next one is steps for category restaurants, that is food and beverages. First one is revenue verification. Verify daily and monthly sales report. Cross-check with bank statements, records of any sales returns off with approval. Next one is supplier payments. Vouch payments using orders, invoices and bank entries. The third one is petty cash. Examine petty cash book and investigate irregularities. Next one is overhead payments. Verify payments for rent, electricity and other operating expenses. Use vouchers and supporting documents for the same. Next one is salary payments. Vouch wages and salaries through payroll, attendance register and bank records. Next one is valuation of stock. Carefully assess inventory for food items and other consumables. Check for large write-offs. The next one is physical verification of assets. Verify fixed assets by using fixed asset register and investments using investment register. The next one is depreciation. Check adequacy and accuracy of depreciation. Next one is verification of liabilities. Collect the list of all liabilities. Verify using contracts and arrear bills. The second one in hospitality sector is travel and tourism. First one is revenue and collections. Vouch customer collections using booking details and receipt counterfoils. Check arrears if any at the year end. Verify commission revenue from companies and partners and also examine the payments made for tour bookings through air, rail, road, sea and hotels etc. Next one topic is booking and discounts. Verify transactions relating to cancellations of bookings and ensure discounts offered to customers have proper authorization. Next one is expenses. Vouch overhead expenses like electricity, telephone, broadband, taxes, local authority dues, and ensure expenses are recorded in the right books. Next one is payroll and staff. Verify salary to permanent staff using payroll, attendance records, and leave applications. Ensure incentives paid to staff are properly supported. The next one is assets and liabilities. Conduct physical verification of fixed assets and investments using fixed assets register and investment registers. Verify outstanding liabilities with contracts and arrear statements. The third one is hotel and guest houses, that is lodging. First one is guest collections. Verify collections from boarders using check-in and check-out data, counterfoil bills and cash book. Check room rent receipts and occupancy reports. Confirm reasons for differential room charges and adjustments for unutilized rent or cancellations. Second one is special events. Check collections from conferences, weddings and other events separately with supporting documents. Other income includes verifying income from bar, casino, health center, etc. and it must match the bills and cash book entries. Inspect hotel premise shops for stock and income. Fourth one is purchase and consumption. Vouch purchases of food materials, beverages and other consumables. Check whether the payments are linked to purchase orders or contracts. Next one is payroll. Verify salaries paid to permanent staff. For casual staff, check supporting documents like attendance sheets and approvals. Next one is expenses. Vouch overhead expenses as well as review stationery consumption and ensure stock records are reliable. The last one is assets and liabilities. Perform physical verification of fixed assets and investments per registers and verify outstanding liabilities using contracts and arrears record. The last type in hospitality sector is cinema halls. First one is ticket controls and collections. Check control over tickets of different denominations, unused tickets under lock and key. Verify collections using daily sales report and cash book and also ensure advance booking collections are properly adjusted. The second one is income and receipts. Vouch rental income for film shows or special events using contracts and receipt counterfoils. Verify income from sale of drinks and refreshments using daily sales report. The third one is taxes and payments. Check proper accounting and timely deposit of entertainment tax. Verify payments to film distributors as per agreements. Vouch advertisement income with agreements and receipts and also verify payments to refreshment suppliers using orders, invoices and cash book entries. Next one is payroll. Verify salaries of permanent staff using payroll, attendance and leave records. Confirm casual staff appointments are authorized and genuine. Next is assets. Conduct physical verification of fixed assets and investments using registers. Check adequacy and correctness of depreciation. Next one is amusement park, that is ticket control and collections. Check proper controls over tickets, unused tickets kept securely. Verify the collections with daily sales report and cash book. Ensure advance booking collections are adjusted correctly. Next is income and receipts. Verify the income from rides, refreshments, etc. using daily sales report. Vouch advertisement income based on agreement and receipts. Payments. Verify the payments to refreshment suppliers using orders, invoices and cash book entries. Verify salaries to permanent staff. Check attendance and leave applications. Ensure casual staff appointments are authorized. The last one is assets. Physically verify fixed assets and investments via registers and also check the depreciation adequacy and accounting accuracy. Here we are concluding today's class. We will be coming up with the second part. Till then, keep learning, keep growing. Thank you.